Hello everyone, welcome back to FX Capital Analysis. This week we will start to analyze midweek review or midweek breakdown. We can see what the price developed from our forecasting few days ago, which is Sunday market breakdown. So for the midweek review, we will review what the progression that the market made from our forecasting. So we start with first pair, which is Canadian dollar Swiss franc. You can see in lower time frame price already pull back from this double top formation and create one flag. If you zoom in lower time frame, which is 50 minutes, it's clearly the price pull back from this double top and create one bear flag that create another double top, which is give you the opportunity or second chance to enter the market. So if you study double top very well, it always give you the chance or the opportunity to enter the market when the price testing another high or another low, which is double top or double bottom. So in this case, if you're able to enter from this area, you will sell this position. If you enter from that area, it will take you about, for this pair the correction quite small, so you able to take a small percentage, which is small pips for your risk, because it will give you high reward. So in this case, you able to take minimum, for argument's sake, we take 16 pips for this risk entry for the double top for the safe side. So normally I will enter at 1 hour retracement candle. Let's say we replay the market. So this is the area of 1 hour retracement candle. So price approach double top. This is 1 hour retracement candle at this body. That's normally I will take. So price for the stop loss above this structure, about 160 pips. For the safe side, yeah, we know the price able to touch this area and pull back, but we enter a double top, which is our override. We move the market, we enter the market before the market move in any possibility. So in this area, if you're able to take this position, it will set one sell position, so the price create another flag. This area, if you're able to take this area, is similar. If you're able to take 16 or 15 pips, it's very high reward for this pair. So if you're able to take as this double top, you're able to sell again for second chance or scale in this position. So we see the price movement, price will play this area with the correction, and price continue to develop within the structure. If you can see, if you study very well this pair, price might be able to pull back again from this area, this 1 2 3 touch, which is this rising wedge or ascending channel. Price able to pull back. If you want to manage to move trailing your stop loss, you will able to trade to stop loss, or you want to capitalize to downside, which is this is correction, one touch, second touch, third touch, and already at fourth touch, you able to sell off again. So that's all for this pair. You see price develop very well, and it's very clean structure to trade. Next we move to USD Canadian dollar. USD Canadian dollar for the last week, we at this area 24th 25th, we still around this area. We move to 1 hour first. We around this area start of the week. So if we forecasting to price to pull back from this area, it's double top. However, price move, if price move, you need to evolve your strategy, which is you need to evolve within the market. What the market show you at the moment, we evolve. So I evolved from trend line, from the red line, from here to here, so which is double top at the second touch, first touch, second touch, price pullback at the double bottom, exactly at double bottom price. pull back from this area. If you're able to capitalize this area, you're able to buy position. At the now moment, price pull back. This might be a second chance that you're able to test this area again and buy. But you remember this trend line only second touch, so the price able to make a third touch and buy position. For this pair is high probability setup, so there's so much potential to price to continue move to the outside, but in high time frame price at the ascending channel, the possibility price to move down to 90% rules is very possible. Next we move to New Zealand Japanese yen. We keep it simple for the mid review. So price already touched previously. When you see when you study the weekly market breakdown, we at this area. Price touch this area, pull back a little bit and move upside. So now price at this area, this high. So there's a possibility you able to sell this position. If price keep tricking up, you will be able to sell for this position. So how are you going to enter, because there's so many possibility price pullback at so many area. So normally I will wait for candlestick formation, which is candlestick formation always a secondary, which is first primary we focus on the structure. If you want to enter, we see any indicator that give us sign that price will pull back, which is 1 hour retracement candle, evening star, morning star, doji, and etc. So this position, if you able to sell off from here, you will able to capitalize. You sell off from here, you able to capitalize. Oh, price might be pulled back to this area again and sell off from here. So keep it safe. If you take 1% loss, doesn't matter. Keep focus and you able to gain or close big percentage if you keep patient and control your emotion. So that's how we trade correction. Next we move to Australian dollar. Australian dollar, the progression quite slow. It's not really slow because in this week we start on this area. We start around this area. So I did put one horizontal line from here in this area. When the price move, the price did not touch this area, so did not trigger my alert. However, we keep it simple. If market move without us, we let it go. So I did evolve this trend line. So when the price move, price trickle up and move up to the outside. So if you're able to capitalize, if you're able to set an entry here, you will deal with this correction. If you deal with the correction, what I did is I did draw a trend line from here. So if you give a second chance, I will buy this position. But when this is quite a big correction, so the price able to trickle up from here and buy from here. So we see how price develop in few 1 or 2 days. For gold structure, I can see this price is quite a deep correction. You can see price develop in one ascending channel, impulse down, create a correction. We start from here this week. We start from this area. I think it's this area, 24th. Yes. So in 24th price, we did focus price to pull back from here. So if you're able to enter, you will sell this position. Now we at this area, price pull back from here, so I evolve the trend line in here. So price able to clean set up from here and sell from here. So how you enter this position, you need to manage or deal with the correction. So for me, if I have the opportunity to sell this area, I will sell it, but I miss the opportunity because I get with the another position. So I did not take all the position. I keep 1% risk at the moment with any position. So if I move other position in break even, I will enter other position. So I miss this position. If the price move to downward without me, I will happy to let it go, because I keep my principle to stay in 1% risk, because we need to control and not let our loss out of control and let our profit run. That's how you'll be sustained in trading. So we move to next pair, which is New Zealand cap. It's very clean structure, show us price did not progress much. Price keep trickle with correction. We start a week with this area. Price create a correction. There's a high possibility price create impulse, correction, and impulse once again. But the high time frame price show us that there's high probability that price able to sell off again. We see which area the price will pull back. Set our alert, keep our focus, and trade the market. Next, we move our wildcard. To our wildcard is price quite start make a progression. Our wildcard normally progress very slow, so we set this area. If price trickle from down here, price pull back. We start on this area this week, 24. This area price still create a correction, so we move to another pair. Australian dollar progressive, very they give us very high progressive because price already pulled back in this area. We did pop one trend line from here, but price breakout. So if price pull back in this area, we sell off from here. So I will set my alert from here. Did set my alert. We see how the price progress in 1 or 2 hours. So last is USD Swiss franc. USD Swiss franc. We want to price to make a touch from here or touch from here, pull back. However, price keep with the progressing with a correction. However, this is wildcard. When you set a wildcard, normally it will execute 1 or 2 weeks afterwards. So we keep the pair closely. When the price happen, we'll be ready. That's the point of wildcard. Sometimes wildcard will be executed by similar week. Sometimes wildcard will execute for the following week. That's the way we trade, because we didn't forecast. We did forecast every week, but when we put pair in the wildcard, we see the price develop for the next following week. We're very familiar with the structure of that pair, so that's how your brain register the price movement and the price action. So when the price hit that high probability point or the point that you want to sell or buy, you will be ready. That's all, guys. Thank you for watching midweek review. Keep your focus, trade safe. Thank you, bye.